Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world one filing at a time. Today we are diving into a report that's like a financial escape room, filled with twists, turns, and lots of numbers. Before we get started, if you're tired of financial jargon and want to understand what's really going on in the business world, make sure you're subscribed and join our Discord community. The link is in the description below. Alright, today we are examining a Form 8K filed by Amrize Ltd. In short, this filing tells us about a big debt swap, where old debt was exchanged for new debt. It's all about how Amrize is dealing with its financial obligations after a spin-off of one of its businesses. Let's dig into the details and see what this all means. The first notable event is the creation of a direct financial obligation. In easier words, Amrize has taken on some new debt. This stems from their involvement in an exchange offer, where a subsidiary of Holcim Finance US LLC swapped old notes for new ones, with Amrize guaranteeing these new notes. Let's look at the numbers. Here we find a table full of numbers, but don't worry. Let's break down what's important. Amrize, along with Holcim Finance US LLC, basically exchanged a bunch of old debt for new debt. Think of it like trading in your old car for a newer model of Fiden. Let's look at the headline numbers. First, the 420% guaranteed notes due 2033, or $50 million of it, was successfully exchanged. That's 100% participation, meaning all the holders of the original notes decided to swap them. Next, the 720 trophy 5% notes due 2036. Out of $482.6 million outstanding, $44 $7,092,014 to exchange. For the 6.875% guaranteed notes due 2039, only 76.54% of the outstanding amount was exchanged, meaning that out of $250 million, only about $91 million was exchanged for the new issue. Moving on, there's this registration rights agreement. Because the new notes weren't initially registered with the Securities and Exchange Commission, Amrize is promising to offer officially registered notes within a year. This agreement exists to protect the new note holders by giving them an option to switch to a safer security instrument in the future. If they don't get this done by June of next year, there could be penalties. However, there is a twist. If Holcim Ltd guarantees the new notes unconditionally by this summer, why this registration thing becomes unnecessary until March of the following year. It's basically saying we'll register these notes soon, but if Holcim steps in, we get a temporary pass. Lastly, there's a legal disclaimer. It states that this report isn't an offer to buy or sell securities. It's just a factual announcement. Always remember these kinds of statements exist so a company can't be sued after the fact for giving investment advice. And a fee now for our overall take on Amrize. The company is in an interesting position. On one hand, they just completed a major debt exchange, getting a good chunk of their old notes off the books and replacing them with new ones. This signals that they are actively managing their debt, which is a positive sign. However, it's worth asking if the company needed this exchange and what it means for its future. There are some clear strengths here. Amrize has successfully navigated a complex financial transaction, indicating they have competent financial management. The overall high participation rates in the exchange offers suggest that investors have confidence in the company's ability to pay their debts. One potential weakness is the complexity of these financial maneuvers. Constantly shuffling debt can be a sign of deeper issues, like needing constant financing. The need for a registration rights agreement also adds a layer of complexity and potential risk. Holcim's guarantee is needed. It may lead to delays. In conclusion, Amrize seems to be handling the financial aspects of the spin-off reasonably well. They've managed to exchange a significant portion of their debt, but it's really important investors keep a close eye on whether they can manage this large amount of debt and watch out for complications that may arise in their complex structure in the future. Alright, that was the decoder for today. What do you think about Amrize's moves and the implications for investors? Let's discuss in the comments below. If you found value in this breakdown, please like the video and subscribe to Corporate Decoder for more insights like this. Also, don't forget to check out our Discord community. The link is in the description below. Thank you for watching.